Welcome to another edition of Chart Talk. I'm Tony Ogorek. I'm here with Portfolio Manager Jeff Viksjo. And Jeff, we're going to take a perspective on the 2022, which, many people found to be, how should we euphemistically say, an unprofitable year. But there are some positives to take from it. So let's take a look at our first chart. What do you say on this?
Yeah, this shows the annual returns dating back to the 70s. And Tony, if you look at it, there's a lot of green. So stocks typically go up. It's rare to have a down calendar year in the stock market like we had just this past year. What's more important too is it's even rarer, Tony, to have 2 years down in a row. So if we look, the last time that happened was 20 years ago after the dot-com crash, and before that it was 20 years before that in the 70s. So very rare that we would have another down year next year.
Yeah, and Jeff, if people didn't know what you were investing in at all, and you showed them this chart and you said you're going to be investing for 10 years, the next 10 years, the next 20 years, I don't care what it is, would you prefer to be investing in the green stuff or in the red stuff? Invariably they're going to say the green stuff, and those are stocks. Now let's take a look at a scatter plot chart. This is sort of interesting also, because it looks at the horizontal asset axis. We look at stocks, and on the vertical asset axis, we see bonds. And you see that there's an orange dot there in the bottom left quadrant. And again, that's where we were in 2022. How does that compare? Again, historically, and this chart goes back to 1926.
As Tony, as we know, stocks fell 19% or so last year. That's not what made it so tough. What made it a really tough year was that bonds fell also. They were down about 12%. And this chart, that bottom left quadrant there, that's showing you years when both stocks and bonds were down. So Tony, there's a lot of dots on this page, and there's only 4 or so in that bottom left quadrant. It shows you what a rare year last year was.
Yeah, and that's Jeff, that's 96 years worth of data. And again, you want to live in that northeast quadrant, which is where you see, most of the dots. And that's really where stocks and bonds have been historically. So, we may not have a big down year next year. And we see this as sort of a rarity. We got one more chart, and the question is, well, then are we off to the races? And this one looks at relative valuations. And what can you tell us when we see this?
Yeah, this chart just shows how expensive stocks are on a price to earnings basis. They're now, after the sell-off last year, they're about in line, with their 25-year average, about 16 times earnings. They're not necessarily cheap. Like I said, that's just about in line with the average, but they're not as wildly expensive as they were at the start of 22, which was about 22 times.
Right. So the good news is stocks for the long run really, work for investors. And, last year took a lot of the air out of stock valuations, and they were about, at average levels. They're not necessarily cheap. But again, I think we're in a better position in 2023 than we were at the beginning of 2022. So thank you, Jeff, and thank you for watching this edition of Chart Talk.